the great news is that Lucid's a tech company, and we're bringing the world's best technology to the market this year here in the US. And I think that the valuation is a reflection of our technology. I think that that has been validated and endorsed through the due diligence that Churchill Capital have undertaken. And this is a tech race. And I believe only two companies realize that and recognize that. Tesla recognizes it. That's led to their preeminent position. Lucid recognizes it. We welcome the competition. Bring it on.
That was Lucid Motors CEO Peter Rawlinson on Squawk on the Street earlier today discussing the electric vehicle maker's plans to go public through a $16 billion SPAC deal with Churchill Capital. Take a look, though, at shares of Churchill falling nearly 40% after that announcement. Our next guest says this type of sell-off is just the tip of the iceberg for investors looking to go long in the SPAC space. Let's bring in Alex Korda, Global Deals Analyst at the Edge Group. Alex, great to have you with us. There are so many people who are willing to just buy a ticker because it is a SPAC. Boil down the strategy in a nutshell. It's best to own the SPAC when, it's best to sell the SPAC when, on average, of course.
Yeah, so on average, and thanks for having me, we, in our study on SPACs as part of our Value Catalyst research, we have found that essentially the market euphoria should be taken with a grain of salt, and that narrow window of opportunity is really in the first few months post-combination, and holding really any farther than that offers diminishing returns in the short term, and that's the risk. Pre-merger, of course, the due diligence is required on the management, less than the company that's to be merged, because there's less clarity on that front.
What do you consider post-merger? Because these days there's all sorts of rumors that this SPAC is going to acquire this company. It's rumored, the SPAC goes up, it goes up, it goes up, and then finally it's announced. That was the case, for instance, with Lucid Motors and Churchill Capital. So when you say, the merger, what is that date? Is it when it's formally announced? When it's done?
Yeah, so in terms of the view that we took for our study, the merger date was the date that the acquisition was actually made, not the announcement date.
So in terms of the biggest gains then would be just in that window of time after the acquisition was actually made. Is that right?
Correct. Yeah.
Steve, you got a question?
In the first 3 months.
Yeah. I'm sorry. So Alex, when you look at this, though, it sounds very mechanical, and I understand your point about investing in SPACs. I've done a handful of SPACs, and I've reaped the rewards of them. But when you look at a SPAC, I concur. I look at the management team first. Then you look at the company that they're buying. But once you look at the company that they're buying, if you believe in that company long term, does all the season, I don't want to say seasonality, but the timeline is sort of just mechanical, to your point. So you're going to get that sell-off, but if it's a great company, then you should get that, in theory, you should get a rally moving forward, no?
Well, so our study looked at 155 SPACs over the past 5 years, between 2015 and 20. And we looked at them in terms of whether they made money and outperformed their respective sector indices, whether they made money but underperformed the index, or they lost money entirely. And what we saw is post the combination that a wider and wider ratio of SPAC listings lost money as time went on, even though the potential returns in those that make money does increase. It's just harder to catch that the unicorn, if you will, on the successful SPACs versus the ones that lose money.
Alex, it's Karen. I might be catching you off guard, but have you studied at all the SPACs that are running out of time and have to come up with some acquisition in short order, how those have done?
So that wasn't the focus of this study, but I'm sure that there are still angles for us to explore in the future for the benefit of your viewers and their clients.
I think you're going to be really busy this year, Alex. Thank you for your time.
Thank you.
Alex Korda of Edge. I think that's a great point that Karen makes, Tim, because with a flood to market of all these SPACs, everyone is looking for a target. And if you're running out of time, you might make a bad acquisition.
Oh, yeah. Oh, yeah. It's a great point. It's a great question. And depending on the industry, where there's enormous tailwinds and momentum, some of these industries, it's about raising money to go chase a deal, and there's a lot of SPACs chasing big deals. This is going on in cannabis. I think there's been some really successful ones. But again, a hot industry, and the pressure to close a deal, I think is something, especially when you're chasing the same assets as private equity, who are loaded with cash right now, and an IPO market which has been rewarding companies coming to market without these other avenues. But I think it's clear to note that SPACs are a vehicle that is, not just a byproduct of enormous liquidity. I think on some levels also they can actually be resilient and help investors ride through volatile periods where the public stock markets tend to throw around underlying asset prices in a way that it's like owning some private equity in a public vehicle. And I think we have to be careful to overgeneralize here, but there's no question the SPAC momentum is here. And in some sectors, it has been the mechanism to get to market.
Yeah, and SPACs vintage 2020, vintage 2021 guy are probably very different from the SPACs vintage 2017 or whenever that Edge study started. A lot of investors out there are just buying baskets of SPACs. As we have learned from Cassius Cuvée, they're scooping up everything because they think within that basket of stuff, there might be the next Tesla or the next Amazon in all of it.
Right. As many people know, 82 was a great year for Bordeaux, but there were some years that were not so good. So, 2020, we may look back and say it's akin to the 82 Bordeaux. 2021, you got A-Rod, who I happen to love, by the way. He had a great 09 campaign for the Yankees, as Tim remembers. I'm sure I know Steve does. But the fact that he's, getting involved in SPACs, it really has to make it scratch your head a bit. Again, this is all at the feet of just money flying around and supply and demand. Think about all the SPACs out there now looking for targets. There are not as many targets. There are a lot of SPACs. By definition, that's going to inflate prices. At a certain point, that's going to be problematic. By the way, ARS, Mel, I know you're a big fan. I am as well. The great Andrew Ross Sorkin has done very thoughtful work on this. And I encourage our viewers and listeners to read some of the things that he's put out.
I agree, particularly on CCIV and LUCID. Some interesting thoughts.
Shepard Smith here. Thanks for watching CNBC on YouTube.